Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Fresh proposal. Oil pairs gains on reports that Iran has offered the U.S. new terms to reopen the Strait of Hormuz, postponing nuclear negotiations to a later stage. The gunman accused of opening fire at the White House Correspondents Dinner spent years buying weapons. While his exact targets and motives aren't yet clear, Bloomberg has seen a manifesto where he appears to call President Trump a traitor. And Kevin Warsh's confirmation as Fed chair clears another hurdle after Republican Senator Thom Tilles drops his reservations following the DOJ's decision to end its investigation into Jerome Powell. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Barsachi in Dubai. Very eventful weekend. We're going to get you up to speed on everything that went down around the White House Correspondents Dinner later on in the show. And, of course, the latest coming through from Islamabad, the whirlwind trip of the Iranian foreign minister around the region and whether there is real progress on that front. Now, the market this morning is reading it. And the latest reports emerging that Iran have presented their counter-proposal as a positive. You can see the handover this morning. Pretty robust from Asia Pacific, MXAP up 1.6%, and then S&P futures up 0.1%. It is a mega week in terms of earnings this week. Don't forget, we have plenty of Magnificent Seven reporting, including the likes of Alphabet, Microsoft, Amazon, Meta, and Apple. All of that is coming up this week. And don't forget that both the Nasdaq and the S&P ended on Friday at yet another record close. It's fourth weekly gain in a row. So we keep going from strength to strength for equities. And it doesn't just stop there. It's not just earnings. We have a huge number of central bank meetings this week as well, the main one being the Fed. It will be Jerome Powell's last press conference, so watch out for that. And we have ECB, Bank of England, Bank of Japan. There's so much to watch out for. So it's going to be a very busy week in the markets. Brent, take a look at where we are this morning. Still up 1.2%. So again, the oil market's still trying to piece through what we got in terms of progress on the diplomatic front between U.S. and Iran. Ultimately, though, as things stand, the strait is still effectively closed and no ships are passing through. So hence why you're seeing this upward pressure on Brent still. And then 10-year yields as we head into this pivotal central bank week up 4.32. Now, here's a chart that caught my attention. I thought this was quite interesting. Green-related stocks have done really well throughout the course of the war. Take a look at that. So this is Adani Green. These are a bunch of essentially renewable or green-related stocks, ETFs. Throughout the course of this war, they have had a stellar recovery, namely because, of course, with the price of oil so high, many economies, including in Asia, are looking for alternatives. And the alternatives are coming from either renewables or from coal. And so the higher oil prices has sparked a bit of a green energy revival. That caught my attention this morning. Okay, let's check in on how markets in Asia are faring as well. Avril Hong is in Singapore for us. So green on the screen today. Avril, walk us through it.
Yeah, another way to reference the green. I mean, we are seeing a lot of gains in Asia. And yeah, maybe on the margins, a bit to do with Iran's reported proposal. And we're seeing the region's benchmark extending gains from last week. The MSCI EM index is hitting record highs, but it's really one story in town that investors have latched onto, and that is the secular growth narrative of AI-related stocks. So if you're a market that is AI-heavy, congratulations to you. If you are responsible for the build out of AI infrastructure, even better, because those are the stocks that are really powering ahead today. The big three in Asia, the chip makers, TSMC, SK Hynix, as well as Samsung Electronics. TSMC's three-day climb is the best we've seen it since November 2022. And of course, some of it has been unlocked with the tweaking of investment rules for that specific market. But again, it's the idea of this rotation back into the AI trade. You talked about it being a big week. It'll be a big week for us here in Asia. We've got the BOJ on deck, and it's expected to stand pat. We're watching for any signals. Aside from that, watching EV makers as well. BYD is set to drop earnings, and we are seeing already that surge revving up ahead of its corporate release. Jumana?
Avril, thank you so much. Avril Hong in Singapore. Now, back to our top story today. Oil prices pairing gains on an Axios report that Tehran, through Pakistani mediators, has delivered a new proposal to the U.S. aimed at reopening the Strait of Hormuz. The weekend saw Iranian Foreign Minister Abbas Araghchi meet mediators on Saturday, then travel to Oman. He also spoke to the foreign ministers of Qatar and Saudi Arabia. The semi-official Tasnim news agency reports that he conveyed Iran's conditions for ending the war, including a new legal framework for Hormuz, lifting the blockade, compensation for damage and guarantees against further military action, but he wasn't discussing nuclear issues. Joining us now is Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East and North Africa, and Stephen Sachinsky, who leads our Asia energy coverage. Stuart, let me start with you with the latest geopolitical developments. I mean, you walked in on Friday thinking there could be the possibility of another round of Islamabad discussions. There are reports that Witkoff and Kushner were going to fly there. That didn't happen. Just walk us through where we are now in terms of the diplomatic to and fro.
So in terms of the weekend, what it looks like is that there was probably more optimism than was warranted on the US side. It was clear the Iranian foreign minister, or at least it was clear by Sunday, that the Iranian foreign minister didn't really have anything new. So you read off there the list of conditions that Iran's putting around it. That looks exactly like the conditions that we've seen dozens of times now. It doesn't appear to be much movement. Maybe there's some detail there that's new, but broadly it looks like their position is unchanged.
But do we have a better understanding of what Iran wants and the sequencing of how they see things unfolding?
Yeah, I mean, they've always been very reluctant to discuss the nuclear file. You know, that's been true since day one. I mean, arguably that's been true for several years now.
Yeah.
So that's item number one. Item number two is they now have huge leverage in the form of Hormuz. And yes, there is a double blockade. Yes, they are also having great issues in getting their oil out. But they now have a pretty big card to play. And it's clear to me, at least, that they're not going to give that up easily.
Yeah. Stephen, let's talk about the Strait, right? Because, you walk in this morning, again, some media suggestions that maybe they're moving towards a framework where there's going to be a lifting of the restrictions on the Strait from both sides. But again, no confirmation that this is actually going to happen. And at the same time, the Strait still is effectively shut. How are oil markets reading all of these dynamics?
I mean, it's something that I think every day people wake up to see which ships have gone through, what's gone through, which ships have been turned around by the U.S. Navy, and what ships are potentially even getting attacked. So I think, when you look at the banks, they've moved their assumptions. We have Morgan Stanley saying now that they don't see a full resumption of travel through Hormuz and oil production in the region until end of June from their mid-May initial outlook before. That's their base case. But also, when you just talk to traders, ship owners, everyone's still very anxious about the entire region. So even if there were some sort of extension of a ceasefire, some sort of breakthrough with the peace deal, it would take weeks and months for them to kind of figure out the insurance, to make sure that their staff and the folks on the ships are comfortable going through, and also that it's safe to do so.
Yeah. Well, remember the story that we were talking about last week, and that, it may take months, up to 6 months, to clear the Strait of mines. But I want to ask you something else as well, because, CENTCOM this morning have said that they've caused 36 ships to turn around, and painting a picture of how successful the U.S. naval blockade has been around Iranian ports. President Trump as well suggesting that we are very close to Iranian storage capacity being filled up to capacity, in the next couple of days. What are we actually seeing from the Iranian side of things, and where their oil storage capacity sits right now?
So I think that's a really interesting number. I think he said 3 days until they'll hit capacity and they'll have to reduce production. And according to analysts that in different parts of the market, the number seems the length seems to be a bit longer. So Kepler, for example, is saying it could take 20 days. Others say weeks. But the fact of the matter is, every day that they're unable to get their oil out, they are under a situation where they're under more stress. Now, they're likely able to manage that with their storage capacity. This isn't their first rodeo. They've had to reduce production before in the past. They know how to operate that. But at the same time, there will be a time, maybe not in 3 days, maybe longer, depending on what, if you look at what the analysts are saying, where they are going to have to cut back that production. I think there's also really something interesting that for the first time, the U.S. has put sanctions, since the war began, on a private Chinese refiner that they accuse of importing Iranian oil. Now, the Chinese refiner denies that, but the fact of the matter is there is this stepping up of pressure on Iran's ability and Tehran's ability to make money off of the oil that they produce and ship, either through Hormuz and also on their dark fleet vessels as well. Which is a bit of a different tactic, I think, than in the early days of the conflict. The Trump administration was really, they even provided waivers for some of the Iranian oil on the water to reach customers because they didn't want oil prices to rise too much. They wanted to release some of the pressure from the market. Now it does seem, at least from the rhetoric from the Trump administration, they're trying to put all that effort on reducing oil flows into the market and put pressure on Tehran to come to the table to some degree to make a deal.
Yeah. Bloomberg's Stephen Sachinsky in Singapore and Stuart Livingstone-Wallace in Dubai. Thank you both so much. Now, a 31-year-old man is set to be arraigned later today over Saturday night's shooting at the White House Correspondents Dinner in Washington. The acting attorney general says the suspect was probably targeting Trump administration officials, but his exact motive is not yet clear. President Trump was asked on CBS 60 Minutes whether he thinks he himself was the primary target.
I don't know. It sounded to me, I read a manifesto. He's radicalized. He was a Christian, a believer, and then he became an anti-Christian, and he had a lot of change. He's been going through a lot based on what he wrote. His brother complained about him, and I think reported him to the police.
Well, for more, let's bring in our politics editor, Laura Davison. Really just shocking sequencing of events Saturday evening at the White House Correspondents' Dinner. Laura, do we have any further details about what the exact motive was of this attacker?
We don't. It's very limited at the moment what we know. We know the man, Cole Allen of California, had written this manifesto in which he appeared to refer to Trump as a traitor and referred to himself as an assassin or a potential assassin. But details are still emerging. Authorities have been searching his home in California. There have been 2 preliminary charges filed by prosecutors dealing with his handling of a firearm, but there are additional charges that we expect will come when he's arraigned in Washington on Monday. But this raises, of course, a lot of questions about security around the president. This is, just the latest in a series of attacks and security breaches around the president, and has, really rattled people in his inner circle. This is a big event, an annual event in Washington. It's held off-site at a hotel, a ballroom of thousands of people. So you have a very big security challenge there of getting the people who are supposed to be on site in the room, but also keeping those who are not supposed to be there out of it. And we saw, on Saturday that at least the attacker was able to breach the first perimeter of security, didn't get quite into the ballroom, but was quite close to where attendees were gathering.
Yeah, I mean, you said that this incident does raise a lot of questions about security around the president and other top officials. What are the likely ramifications now that an assessment is taking place?
Yeah, so you have kind of on all fronts, both the White House Correspondents Association and the Secret Service, D.C. Police, all reviewing their protocols and doing an after action on exactly what happened. In prior incidents like this, we have seen, top officials at the Secret Service lose their jobs, step aside, resign. Right now, there isn't any indication that that will happen. The White House put out a statement saying that they stand by the law enforcement and Secret Service agents who were involved in this incident. But, President Trump has really proven to be a difficult case, partially because he likes to do some of these big events, outdoor events. Of course, this one was, one that's been happening for decades, was indoors, but it just raises the stakes, particularly as we see President look to go overseas to China here in a couple weeks. You have the King of England coming to Washington this week. It's really at a moment where you have a bunch of these high-profile, high-security events. Having a lapse like this just days before, raises a lot of anxiety that, future things could go wrong.
Political editor Laura Davison in Singapore, thank you so much. Well, coming up, stocks are climbing and oil is off its highs on fresh hopes of a deal to reopen the Strait of Hormuz. But is the market getting ahead of itself? Hear why Macrovisor's Ayesha Tariq says the real risk lies beyond oil. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stocks have advanced in Asia today, while oil is off its session highs after a report that Iran offered the U.S. a proposal to reopen the Strait of Hormuz. Investors are also bracing for a packed week of central bank decisions and big tech earnings. Joining us now is Ayesha, Tariq, co-founder at Macrovisor. Look, Ayesha, if I look at equity markets, essentially they've moved on from the war. They've moved on for whatever reason, not really reacting as much to all of the headlines that are coming through from the region, perhaps a lot more focus on earnings. Are investors being too complacent, do you think?
Good morning, Jumana. Thank you for having me. So I think, yes, they are being a little complacent here. But having said that, there's something you pointed out, right? Focus on earnings. Now, earnings have seen some of the highest revisions in the last couple of years. And what we're seeing or hearing from earnings as well is that the American consumer remains relatively strong. And so therefore, the focus is on that at the moment, the American market, right? Where things haven't gotten so bad. We have seen the price of gasoline increase, but we're still very early into the war as far as earnings season is concerned. So I think we might see the impact of this further down the line, maybe in Q3 or Q4, as you know, the oil issue compounds in the next few months.
Yeah. Last time you were on, which was, I guess, about a month ago, and you were speaking to us live from Bangladesh. And at the time, you cited specific energy demand destruction measures that were being put through by the government in order to curb people's consumption of energy. You fast forward to today. How meaningful do you think these energy curbs have been in terms of the market adapting to this new status quo, which is, essentially that the strait is still effectively shut?
So you have two sides to the story here. So the government has actually stepped up measures quite a bit. And on the one hand, you have people lining up for fuel for over 4 hours. And you've seen that in other countries as well. On the whole, I think things are still relatively stable. However, there is some discontent rising, obviously, in the country. On the government side, they have tried to put in fuel subsidies and they have tried to ration some of that fuel. But the bill is coming due. So the government has spent an additional $2 billion to buy spot cargoes. And that's actually putting pressure on finances now. We've recently raised the price of fuel in the market as well.
Do you think that a sufficient amount of demand destruction is going to happen with oil trading or Brent trading at $106, i.e., doesn't it need to be a lot higher for more meaningful measures to be introduced by governments?
So the interesting part is it's not just about where Brent is trading, right? So you and I both know that we've seen anecdotal evidence that physical cargoes are trading at much higher levels. And that's the case for LNG, for refined products. And so therefore, I think, the actual hit is much higher. And we are seeing demand destruction to a large extent, forced demand destruction right now. And that's going to lead to real demand destruction, I would say, in the next month or so. So by May, we'll see a much bigger hit.
Interesting. And what do you think the knock-on effects are going to be to macro, to equities and to credit that have been brushing off, again, what is happening in the energy space?
So you have two things, right? So you have the consumer on the one hand, where discretionary spending will start to decrease, and therefore you'll see slower growth on the consumer spending side. That's probably good for inflation in a way. But on the other hand, you'll also see governments, start to struggle. So, for example, in most Asian countries, we're looking at pressure on dollar reserves, again, because we have to buy energy in dollars. So fiscal policies are going to be, impacted all over the world. The spending that could have gone towards rebuilding, construction, infrastructure, that's going to come under pressure. And then, of course, you have the final leg, which is the Gulf. The Gulf is a big investor all over the world. So that that's another place where we're going to see some pullback and therefore less capital flowing around the world.
Okay, something to pick up on our next conversation for sure. Macrovisor co-founder Ayesha Tariq, thank you so much for joining our show today. Still ahead, Kevin Warsh has moved one step closer to being confirmed as the new Fed chair. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Former Israeli Prime Ministers Naftali Bennett and Yair Lapid have merged their parties to create one that could outpoll Benjamin Netanyahu's Likud. The party, called Together, will be led by Bennett, who, according to weekly voter surveys, is the strongest challenger to the incumbent. Israel must hold elections by the end of October. King Charles and Queen Camilla are set to arrive in Washington for a 4-day trip to the U.S., the first British state visit since 2007. Ties between the nations are at their lowest point since the 1950s, with Prime Minister Keir Starmer under fire from President Trump for refusing to join America's initial strikes on Iran. The king is expected to address a joint session of Congress and attend a White House banquet. A social media account affiliated with Chinese state media says DeepSeek's delayed release of its V4 model points to a shift towards deeper integration with China's chip ecosystem. The startup on Friday released preview versions of its long-awaited new model, but analysts have told Bloomberg it fails to narrow the gap with leading U.S. products. The account says DeepSeek spent months working to optimize performance using Huawei chips. And a look at markets as we head into the break. This is what the equity screen looks like, and we are trading towards positive. S&P futures up 0.1%. Nasdaq up 0.3% as well. Both of those indices reaching record closes by the end of the week last week. A mega week coming up. We've got a whole bunch of central bank earnings to watch out for, in addition to earnings, I should say central bank reports to watch out for, in addition to earnings, the Magnificent Seven leading the way. So very busy in terms of market events in the U.S. and globally to watch, plus some inflation figures in Europe and Japan too. So a stacked week coming up in terms of data. Now, coming up, we look into the state of the real estate market here in Dubai as the war has an impact on prices and sales. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Fresh proposal. Oil pairs gains on reports that Iran has offered the U.S. new terms to reopen the Strait of Hormuz, postponing nuclear negotiations to a later stage. The gunman accused of opening fire at the White House Correspondents Dinner spent years buying weapons. While his exact targets and motives aren't yet clear, Bloomberg has seen a manifesto where he appears to call President Trump a traitor. And Kevin Warsh's confirmation as Fed chair clears another hurdle after Republican Senator Thom Tilles drops his reservations following the DOJ's decision to end its investigation into Jerome Powell. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersace in Dubai. Very news-packed weekend, I should say. And we were just talking about the events that unfolded at the White House Correspondents Dinners. Some questions about security also vis-a-vis the president and other senior top officials. So all of that, no doubt, will be under investigation in coming days, as we also talk about the geopolitical developments and the fact that we did not get a second round of talks in Islamabad this weekend, but we did get a massive diplomatic push and potentially a new framework for eventual discussions. So the market is reading all of this as a positive. Overnight, we had a very robust handover, I should say, from Asia Pacific. But though I will say it's mostly led by the tech space, as we were speaking about last week. MXAP up 1.6%. S&P leaning towards positive this morning as well, up 0.1%. And I should say that both the S&P and the Nasdaq on Friday closed at record highs. This week, lots to watch out for. We have that Fed meeting meeting. We have other central bank meetings as well, including ECB, Bank of England, Bank of Japan. Plus, we have Magnificent Seven, 5 companies reporting. So on the earnings front, it is going to be really pivotal for direction on where we go from here. Brent also today up 1.2%. We're trading around $106.50. So again, here, the focus is on not necessarily an imminent breakthrough, but also the fate of the Strait and whether one or both of the blockades that are in place can actually be lifted at some point in the near future. And that is going to be a big determinant of where oil goes in the next couple of weeks. So keeping an eye out for that. And then 10-year yield sitting at 4.32. We are up a couple of basis points as we head into that Fed meeting on Wednesday. Switching over, I flagged this earlier, but I thought it was interesting to note, given where oil is trading and the fact that Brent is at $106, we've been speaking about energy demand destruction, new energy curbing measures that governments have put in place. What has happened is what you are seeing is a bid for renewables and for alternative sources of energy. And actually, the green sector has done really well throughout the course of this war. Not really a surprise, but here it's quite evident that, especially in Asia, many of these Asian countries that are very dependent on imports from the Middle East, they've been looking for alternatives. And those alternatives are coming in the form of either solar and other forms of renewables, or going back to coal again. So a bit of a barbell approach. And here you can see that because of that, you are seeing a bit of a spike in some of these green energy assets. Okay, let's go back to markets now and check in on how markets in Asia are faring. Avril Hong is in Singapore for us. Avril.
Yeah, Jumana, we're seeing Asia stocks power on as maybe some of these reporting regarding Iran's proposal is lifting sentiment, but it's really about tech that's helping the region's benchmark to extend advances from last week. It's also helping the MSCI EM index to records, because when you look at the worries about the energy shock, perhaps tech is seen as more insulated. That's point one. And the other is, of course, if you are responsible for the AI infrastructure build out, the picks and shovels, congratulations to you. And you're seeing the likes of TSMC, for example, on a 3-day surge. And this climb is the most that we've seen it since November 2022. And not to be left behind, we're also seeing some of the other chip makers in Asia, SK Hynix, Samsung Electronics, doing well in trade today. Now, aside from those chip-related stocks in the region, keeping an eye on BYD as well. You talk about the transition to green. BYD has sort of been a beneficiary of these elevated oil prices. The other thing we're watching, of course, in the region this week will be BOJ, the signaling that's coming from the central bank at the time where the worry is that they are behind when it comes to hiking to help to cushion the blow that's coming for import inflation from the weakness in the currency as well. Jumana?
Avril, thank you so much. Avril Hong in Singapore. Well, U.S. Senator Thom Tilles says he is dropping his opposition to Kevin Warsh's nomination as the next Federal Reserve Chair. Tilles says the Justice Department's decision to end a criminal investigation into current Chair Jerome Powell removes the threat to the central bank's independence. The move sets the stage for a faster confirmation of Warsh to succeed Powell, whose term ends on May the 15th.
I am prepared, and with the assurances from the Department of Justice that the case is completely and fully settled, that the appeal would only be used to potentially abrogate or change the ruling for administrative purposes, not as a basis for reopening the investigation, and that the only way an investigation would be open would be a criminal referral from one of the most respected inspector generals there. I am prepared to move on with the confirmation of Mr. Warsh. I think he's going to be a great Fed chair.
Well, the Fed is among the major central banks delivering policy decisions this week, and it is expected to join the Bank of Japan, the ECB, and the Bank of England in holding rates steady. Policymakers are keeping a hawkish eye on fallout from the Iran war as higher energy prices and inflation risks dominate the outlook. Bloomberg macro strategist David Savage joins us for more. Let's start with the Fed and the fact that this is likely to be Powell's very last press conference. In fact, it is going to be his last press conference. What sort of messaging can we expect from the Fed this week?
Yeah, hi, Jumana. I think it's going to be what investors are going to be looking for is similar to what they're going to be looking for from the BOJ and ECB. Is how hawkish is commentary. As you said, expectations for actual changes to policy rates is based on market pricing is very, very low. And so, again, we've seen equities be able to essentially, put the conflict and higher energy prices to one side. Bond yields, not as much. Bond yields have remained elevated, and that's because rate expectations for this year have remained elevated. And that's because, similar in the U.S. and elsewhere in the world, the pass-through of higher oil prices, higher commodity prices, fertilizer disruptions, all of that, can pass through into higher inflation.
And, if you look at what's priced into interest rate curves, the U.S. is still pricing in cuts for this year. That's not the case for the ECB and Bank of England, for example. So do you think that it could be a clear case where the European Central Bank, the Bank of England, actually do lay the groundwork for eventual rate hikes this year, whereas the Fed are a bit more cautious?
Yeah, I think at this stage probably there's higher expectations for Governor Lagarde in terms of what type of messaging she might come out with, and I think overall, what investors are going to be looking for is what emphasis do central banks put on near-term inflation risks, particularly related to the conflict, versus medium-term or longer-term demand destruction risks. And so, that's certainly a factor for the ECB. It's certainly a factor for the BOJ as well. And so that's coming up. And there's certainly a question of whether if Governor Ueda doesn't come out and, isn't hawkish enough, do we get back into that negative feedback loop of a weaker currency, weaker JGBs, and certainly a risk for markets to watch.
Bloomberg's macro strategist David Savage, thank you so much. Well, turning to this region, Dubai has become one of the world's top real estate markets post-pandemic thanks to expats and foreign investors. But the market has declined as a result of the regional conflict. A home price index compiled by ValueStrat fell 5.9% in March from a month earlier, while a report by a Dubai-based property consulting and valuation firm has found that the value of residential sales in the city dropped by nearly a fifth to 37.2 billion dirhams in March. For more, we are joined by our Middle East real estate reporter, Zainab Fatah. Zainab, talk to us about the impact the war has had on Dubai house prices so far.
Well, the impact is exactly what you would expect. We have seen a decline in both the property prices across the city, in some areas more than others, but overall, in the index that we use, tracks over 70 locations. We're looking at around 6% decline on average. But some areas, of course, declined more than others. When we look at the volume of transactions, the numbers, the money, it's actually less by a fifth, but also the number of transactions. We've seen about 13,000 transactions in March compared with around 16,000 the month before the war started.
Well, what are developers saying?
What developers are mostly looking at right now is what they're going to be able to sell in the future. There is the primary market here, or the off-plan market, makes up about 70% of Dubai's property sales on any given day. And this big chunk of the market, there is a fear that would be the most impacted, because it requires, when you buy a house that's going to be completed in 3 or 4 years, you really need certainty on how things are going to be at that time. And for now, everyone is expecting that you might see a slowdown in that part of the market for a while until things stabilize and we get more idea of population within Dubai, whether the population growth will continue, and also in terms of construction costs, because construction costs have gone up quite a bit because of the closure of the Strait of Hormuz, which is still closed.
Yeah. And Zainab, have there been any new sweeteners or incentives to bring buyers and new renters to the market?
We have seen quite a bit of developers launching projects in March, which was truly astonishing to me. I would have never expected any developers to bring more products to the market, but we've seen some of them do that. And what they tell me is sales are continuing. one developer told me he was surprised. He was like, I did not expect anybody would be buying, but we still have sales continuing, because some people thought the market went up so much that any dip would be an opportunity to get in, especially those who see themselves as always going to be in Dubai with no plans to leave anywhere else. So on that end, you have that part of the market kind of giving you a bit of an assurance and showing resilience, but also what happens with the Strait of Hormuz and how that is all resolved within the region will weigh on demand going forward.
Yeah, for sure. Zainab, thank you so much. Zainab Fatah, our Middle East real estate reporter. Well, coming up, we discuss the state of the economy and fiscal resilience of the UAE with Hasnain Malik from Tillimer. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Our next guest says the UAE's inquiry about a currency swap with the U.S. is more about taking out an insurance policy rather than a sign of a fiscal crisis. The Emirates informally inquired about potential financial lifelines, including a currency swap, if the economic and financial impact of the war worsens. President Trump said last week that a deal was under consideration, calling the Gulf nation a good ally. For more on this, let's bring in Hasnain Malik, Managing Director for Emerging Market Equity and Geopolitical Strategy at Tillimer. Good to have you with us. I am going to ask you the question everyone has been asking since the story emerged. Why would the UAE ask the Fed or the U.S. for a swap line?
Well, normally a swap line is requested by a country in, to a degree, a state of crisis. I think it's very hard to describe that as a state that exists in the UAE today. Clearly, the war is having a damaging impact. So tourism levels are down. Your previous segment discussed how real estate prices have suffered. Trade and transport through the region clearly is down with the blockade of Hormuz and the lower demand for air travel through the city. But, two things. One, if you look at the level of foreign reserves, so liquid foreign reserves, put sovereign wealth to one side. Liquid foreign reserves are still very high, were very high coming into this war. Almost covered the entirety of non-resident bank deposits, almost the entirety of the money supply if narrowly defined in terms of M1. And so the question is, as you put, why request this? I think this is much more about putting in place a backstop, a buffer for liquidity in case required. If you go back and you look at the drivers of the war, you have Iran on one side, the US on the other, neither of which appear to be in a hurry to bring this war to an end, and specifically to reopen Hormuz. If Hormuz would have remained shut for another 2 weeks, 4 weeks, 6 weeks, that clearly drives pressure on liquidity, and the liquidity specifically in US dollars. Much better to make that request right now from a position of strength than when there is a real moment of crisis down the line.
So would you describe it as insurance against the worst case scenario then?
Absolutely. It's preparation for what happens if the Hormuz Strait is still blocked in 2 months' time. If we're sitting here in June and we still don't have a restoration of trade, then there will be pressure on the need to make payments and the access to cash flow. That's why now is a good time to make that request, not when you get to that stage in, let's say, May or June.
Okay, I take your point on solvency versus liquidity, and we know that these are wealthy nations. The Gulf nations are wealthy nations, so the asset wealth is actually there. Do you see a real risk of a dollar shortage emerging in the coming months?
I think no one could have imagined coming into this year that we'd have 2 months where the Hormuz Strait was blocked. So we've got to be realistic. And we have to have a pessimistic scenario built in where maybe that blockade lasts for another 2 or 3 months, as I say, because neither protagonist, the US or Iran, and for that matter, Israel as well, appears to be in a hurry to resolve this. That's why the groundwork has to be put in now in case that worst scenario materializes. Now, if it does, all of the GCC states, with perhaps the exception of Bahrain, have the financial wherewithal to get through this. But the question is, how do you mitigate the damage? Part of mitigating the damage from the UAE's perspective is getting in place this sort of currency swap, which will alleviate any concerns in the market about dollar availability and certainly reduce the risk of any payment delays to suppliers who require payment in dollars.
Yeah, I guess one of the other questions people are asking is it becoming more difficult for these Gulf nations to defend the currency pegs that they have in place versus the USD?
Well, when it comes to the currency peg, it depends a little bit on how you come out as an answer to your first question, which is if the swap is being requested in a moment of crisis, then there would naturally be a question over the sustainability of the currency peg. If, on the other hand, you're in my camp, which is that, no, this is an insurance policy for the very worst case scenario, then I don't think there's any risk to the pegs over a, let's say, 1 to 5 year view. As long as we do ultimately get the reopening of Hormuz, as long as, particularly for the UAE and Saudi Arabia, there are alternate supply exit routes for oil exports, then you should still get the cash flow coming in from the oil industry. Take one step back as well and look at actually how resilient the non-oil sector has been. You know, yes, real estate pricing has gone down, but it hasn't come to a halt. Long-haul air travel connecting via hubs like Dubai, Doha, and Abu Dhabi is still going on, even if if tourists are not stopping over in these markets. And you look at the banks. The banks reported in Q1 giving you no evidence whatsoever that there were signs of distress despite an entire month where the war took place.
Hasnain, a pleasure to have you on. Thank you so much. Hasnain Malik, Managing Director for Emerging Market Equity and Geopolitical Strategy at Tillimer. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Coming up, as the European earnings season gets into full swing, we look into the corporates to watch this week. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Let's turn to European corporate results as the earnings season gains momentum with the likes of banks, autos and energy companies reporting this week. EMEA stocks reporter Chloe Millet joins us now. Chloe, okay, banks, what can we watch out for? Let's start there.
Yeah, so the first thing that we're going to be watching out for is really the boost from market volatility. So the same market volatility that Wall Street traders have been able to capitalize on, we're expecting European traders as well to have capitalized on. And so that's really a boost for the likes of SocGen, Barclays, UBS, although the comparatives for this quarter are actually a little bit more difficult. So we might not see as impressive of a growth as we've seen with US banks. But then what's interesting for banks this quarter is that after a few quarters of being really kind of undeniable top performers in terms of earnings, we're actually going into this earnings season with a little bit more of a mixed backdrop, a little bit more of a complex picture. And so, for example, we've got this prospect of higher interest rates if those inflationary pressures continue. And this is really going to be a double-edged sword because that could boost net interest income. But at the same time, we could have this weaker consumer confidence really impacting loan growth and forcing banks to set aside more cash as well for bad loans, potentially higher provisions. And so what investors were going to be looking at for is really what side of the coin really those banks are going to be falling on. And so there'll be a real focus on the outlook on this loan growth and provisions outlook in particular.
Yeah, makes sense as the energy crunch gets worse. Let's talk about autos too. A whole bunch of earnings dropping. What's the backdrop going into this earnings season?
Yeah, it's interesting because European car sales are actually improving, so that bodes actually quite well. But then at the same time, the same challenges that have really defined car makers' performance throughout 2025 are still quite relevant. We still have those tariff costs really weighing on performance, and we still have the problem of, well, the challenge of those Chinese manufacturers really competing on price as well. And so that is quite difficult for the likes of Mercedes, for example, in that region. But for individual names, we could see maybe some recovery here and there. We could see margin recovery at Porsche, for example. We could see quite a strong underlying performance for Volkswagen despite a production write-down. And one of the big names actually to watch out for is Stellantis. So it said that recently North American shipments had really grown quite significantly. And so this perhaps indicates that there's a turnaround that is working for the company after really years of losing market share in that North American market. So we can see some green shoots essentially across that industry.
Okay, so one name to watch out for there. And then finally, going to wrap things up with all of these energy companies. I mean, you got to expect that the numbers are going to be quite robust given where oil prices are trading right now.
Yeah, absolutely. We're really expecting the focus to be on those higher energy prices and how much that has boosted earnings. We already had BP, which is reporting this week, saying that it had seen an exceptional first quarter oil trading performance. So we already have a bit of a taste of what's to come. And this is particularly important for BP, given that it's a company that is in the middle of this big turnaround, this refocus on oil and gas. And so this boost to earnings might be seen potentially as an early win for the new CEO, although that is due primarily to external factors rather than internal strategy.
Chloe, thank you so much. I know you've got a busy week ahead with all these earnings hitting. Chloe Millet, our EMEA stocks reporter. Well, speaking of, this is how equity futures are shaping up as we head into the week and into the European session. Green on the screen, S&P leaning positive, and NASDAQ also up 0.3%. Huge number of Magnificent Seven companies reporting this week as well, so watch out for that. And then, of course, all of these central bank meetings. So it is going to be a busy one in terms of data to watch out for. And, of course, in this part of the world, keeping an eye on geopolitical developments and whether we do get an ultimate lifting of the closure around the Strait of Hormuz. But that is it for Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. Stay with me for Daybreak Europe. This is Bloomberg.